Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello trading friends, checking in on the market to wrap up the week. So overnight we have news of top Iranian official being assassinated by the US, significant reaction, social media going nuts. We have futures dump, we had oil breakout, we had gold breakout, and we even had Bitcoin with a bit of a delayed reaction with a bull move. But whenever I see something like that happen, I always remind myself, headlines do not tell me a thing, because a lot of people went into today with headlines dictating what they should be doing, whether it's going short, whether it's going long oil, and it likely resulted in a lot of red trades based on those headlines alone. For me, I approached this morning saying what I always say: show it to me, bears, prove it to me, show me bear volume, show me breaks of support, show me an all-out dump. And then I will believe you that this is a significant event. Now, geopolitically, sure, it's a significant event. Maybe we're going to see retaliation. Certainly, there's going to be a headline narrative for the next few weeks at the least with this playing out a bit more. Could it end up impacting the market more down the line? Yes. But what today tells me is this market does not care in the slightest about the current news that we have. Now, every time we get new news, if Iran bombs a U.S. base and kills some troops or something along those lines, that will be new news. But the news for right now is known and it is priced in, and the market is telling us that it is just fine at this point. Daily higher low, 320.15 held. We ended up green with the bulls buying right at the open, and it was a significant enough bounce on the hourly time frame to expect, in my opinion, that we're going to be looking for an hourly higher low. So we'll see if we get any headlines over the weekend, but as of right now, if we were to open Monday right here, I would expect an hourly higher low to form with the low of pre-market, and I would expect the bulls to attempt an hourly trend change to be looking right back at the all-time high. If the pullback from the high of today were significant enough, then we would look for an equilibrium to be the end result. And if something else happens and we see increased bear volume, then we could drop to a lower low. But 319.69 was the most important support to me heading into the morning. And I even approached the morning saying, this is a decent setup for the bears in the sense that we're looking for an hourly lower high. We've already bounced over 3 hours heading into the open, but the bears couldn't do anything with it. If they were going to be strong, they would have seen big bear volume right at the open. We would have dropped straight down, broken the low of 319.69, and obviously that did not happen. IWM. So on the daily time frame, lower low, more consolidation is taking place on IWM than on QQQ or SPY. Weekly consolidation clearly underway. Anything above 158.10 is a weekly higher low. So no red flags on this consolidation right now, but it's not nearly as strong as XLF, QQQ, and SPY at the moment. So that is worth noting. And we have a 4-hour downtrend we can be watching with the high of the bull move, low, lower high, lower low. Anything under 166.75, just another lower high. That's a bit condensed. If we wanted to use the hourly time frame with extended hours, a clear hourly downtrend. Have to change that trend for the momentum to shift. QQQ, very similar to SPY, hourly time frame, turning on extended hours. Again, significant bounce. The size of the bounce is why I'm looking for an hourly higher low to be the most likely scenario. And into Monday, the question is, can we then change the trend or not? If not, then further consolidation is required. Keep in mind, bigger picture, for the market as a whole, we can lose daily uptrends and there will still be bulls looking to buy that dip. Looking at the S&P 500, right now, if we drop down and break 320.15, daily uptrend is lost. But you zoom out and anything above 307.13 is a daily higher low, or a weekly higher low, I should say. So we could drop down 6%, 5% or so, less than that, 4 to 5%, and still be looking for a weekly higher low to form. And that's the case for QQQ as well. XLF, I continue to watch 30.57 as the most important short-term support level for me. And we held it today by 2 pennies. You better believe this morning I was watching that support level. And then we saw XLF hit the high of the day. And that's not where I'm looking at. hit the high of the day at 30.78. That ended up being a double top with 30.77. And as soon as we broke that double top for a new high of the day on XLF, the bulls got a lot more comfortable with where they stood on the morning. And that's because the daily support held, the 5-minute trend changed, and the bulls got bounce follow through. XLV is continuing to consolidate more significantly, just like IWM. So weekly consolidation for the higher low is underway. And again, we will need, for names that are seeing weekly consolidation already underway, we'll need a daily trend change for them to be back in full control. Right now, a daily lower high of resistance is 102.29. So having to regain the daily uptrend for IWM and XLV, whereas XLF and QQQ and SPY don't have to do that at this point. XBI is the weakest sector that we check in on in these videos. It's been pulling back notably, similar to IWM. Weekly consolidation clearly underway. Anything above 72.97 is a weekly higher low. So certainly looking for XBI. And if you're looking bigger picture and longer term, and if you think that the Fed printing money is going to outweigh any Middle Eastern conflict, then you're looking to buy weekly higher lows and scouting for the potential of exponential support to be a visual guide. The VIX, big spike, giving it all back. 1240 is a level that stands out, and 1620, 1690 to resistances. As far as the weekly chart goes, I'm viewing it as a low, high, higher low, lower high. So this is a tightening range on the weekly chart, and we'll see how this shapes up over the next couple of weeks. Gold enjoyed it. So right on cue with the video I was talking about yesterday, where gold is performing really well with zero market fear. There's your market fear, there's your volume, and there's your continuation. So no daily consolidation in sight. We are testing our monthly resistance. If we break 1557, that will be the highest price that we have seen in 7 years, 6.5 years. That's a long time. It'll confirm the monthly bull flag, and we'll be looking at 1600 psychological resistance from there. Let's look at the yearly chart for gold. If we're going to see $19.21 is the level. So it's going to get very interesting because it's entirely possible that this breakout on gold just results in a yearly lower high, and this could be a yearly equilibrium. Don't lose sight of that possibility. The size of the pullback that we saw, giving back something along the lines of 40, 45%, that is a significant distance to cover again. It's absolutely possible, especially if there's a fundamental catalyst. But if we were to lose the weekly uptrend, that would be a very early signal. We would really need to lose the monthly uptrend to be convinced that our yearly lower high has been set. It's just something that I keep in the back of my mind because I could look at this monthly chart and say, oh man, we're breaking out, full control, and lose sight of the bigger picture, which could mean tightening ranges for multiple more years. We'll see. I'm not ditching my position. I'm going to try and hold that as long as possible, ideally years. Silver, a lot more toppy than gold. So big upper wicket profit taking, 4-hour uptrend is still intact. When we lose the 4-hour uptrend, we zoom out and look for daily consolidation to be underway. Miners not performing well today. Gap up open, very weak day, almost a bearish engulfing candlestick there. Why are miners not performing? Have to keep in mind that miners are impacted by markets overall and the individual companies that make up the ETF, of course. And the best case scenario for gold miners is market up and gold up. Today was gold up and market down, and the miners correlated more with the market than they did to gold today. So in the past 2 weeks, I have noticed the miners weaker than gold, the miners stronger than gold, and the miners weaker than gold. And that's the correlation, just going back and forth, never being set and consistent, always slight variations. And that's important to note. If you're looking to play gold, just play GLD or UGLD or one of these ETFs that is based on only gold. These miners have more factors at play. It can be more lucrative at times, but it can be more frustrating at times as well. Oil had the bullish reaction. So I saw on social media, a lot of posts buying oil first thing tomorrow morning. And anybody that did that, if they did it after 5 a.m., ended up losing money today. So again, the headlines alone should not dictate our decisions as traders, and that's why we use technical analysis. So daily higher low is now set at 60.60. big bull move, 4-hour consolidation underway. 4-hour higher low is 62.20, and the size of this range is significant enough where we may look for a 4-hour lower high to be the result compared to 64.05 and for a tightening range to form. Either way, bigger picture, we know the oil bulls are in complete control. We broke the high of the last Iran news that we had, and 66.58 is now the key level, keeping in mind that if we lose the daily uptrend, which we're not close to doing, but if it happens sometime in the next week or so, we're just looking for a weekly higher low, anything above 54.83, tons of space for the bulls to work with. Natural gas, weak bounce attempt, again, not doing anything bigger picture. 4-hour time frame, still in a downtrend, exponential resistance, rejecting each bounce attempt, and for me, it's bigger picture. Anything on the daily under 228.8 is a lower high. I would expect one more bounce before 2039 comes in the picture, but I would expect that bounce to give us a daily lower high as well. So that's where we stand into the weekend. Keeping an eye out for headlines. Again, always dependent on how the market reacts. What does real volume do? Keep in mind that futures trading moves on a lot less volume than a regular trading day. It's also important to note headlines are going to be potentially fabricated for reactions from algos and bots. I can enter a bunch of puts, or I can enter VIX, TVIX I should say, and put out a headline that gets distributed around social media real quick and on some of the news channels of an attack. That's what this was, an attack on a US base. Dumped down for 10 minutes and then gave it or regained it all back as soon as we slowly priced in that news and then found out there's nothing really backing that up right now. This isn't really legitimate. And that was the case with the China news with the trade deal as well. They would get headlines of, sources say or whatever it was with no real information in the headlines, but the algos would react to the headline. And that's what happened today. So keep in mind that any headline now with Iran, this isn't your grandpappy's market. This is a market that's reacting to Twitter, algos, and bots, and people manipulate those things for very fast moves in their favor to manipulate the market. And it's just a new part of the game that new technology is bringing in, and it's definitely something to be aware of because it does impact short-term day trading activity. Thanks again. Have a good rest of your weekend, and we will see if we get any headlines over the weekend.